the SPX, I think, is an interesting position. We've always had this daily hammer coming on a little bit of higher volume, right? In yesterday's session. So bearing in mind, this is an important point. Indexes do move slightly different to regular currency pairs, or Euro USD, etc. So if this was a currency pair, I would say, well, we're extended into this breakout. This is a prime opportunity for a fake out to happen. We come back up, we take retail, and then we continue in that trend direction. Okay, but indexes are slightly different. So it certainly is a bullish sign. Am I go ahead and say go and buy up the stock market? Certainly not. I've still got a bearish bias from a personal standpoint. I don't see any confidence really in the stock market. I don't see any confidence in investors. I don't see any fundamental reason why. And I know we've seen that before. Markets rallying on really stimulus. I mean, really, but it's slightly different now. Slightly different. We have had our V reversal. So I'm thinking possibly pullback and selling into this SPX pullback. I'm still bearish on the stock market from a personal point of view, from a technical point of view as well. If we move out to the weekly chart, for me, this had to go from here. This had to continue from this kind of harder reset from this trend and push on, which it didn't do. So I think it's in an interesting position where if we do see a drop off, this market could really wobble. In which case, obviously, from a trading perspective, you're looking at those risk-off currencies, your yen, US dollar to some extent, although I'll go through that in a second, and your Swiss, right? And I still believe that is the case. I still believe that selling into any pushes or looking for trades that are, essentially buying a pullback would make sense. In terms of a trading perspective, for me, a V reversal, if we do get a slight pullback coming into here, push down, I'll be looking at taking this as a breakout to the downside. But I am wary that we could get a slight pullback. So potentially looking at some strength in those risk-on pairs or risk-on currencies, such as the Kiwi, CAD, New Zealand. But just be aware that there could be a limit to that. Henry from Madrid, Francis, Essim, I love your man in trading. Thank you, buddy. Hamraz from Germany. A1 is such a nice channel. Yeah, it is a good channel. It is a good channel. Hit the thumbs up. Hit the thumbs up. But from a 4-hour perspective, we are still in this corrective. It doesn't have to happen. From a daily perspective, we don't have to get that push. We could be getting, something similar to what we've seen before, and we continue down. The markets fall quicker than they rise. So I'm just a little bit wary of taking any setups, potentially buying those risk-on currencies at the moment. My bias is this continues down. I don't see a reason just yet why the stock market should rise. Personally, my personal point of view, but I ain't going to put my house on it. I ain't going to put my house on it because we've seen it rally time and time again. Okay, the dollar. The dollar is a little bit or a wee bit extended, as they say in Scotland. We are looking to be potentially correcting through time rather than through price. What I mean by that is a correction through price is essentially a pullback. Correction through time is essentially your ranging price action from our latest kind of climactic impulse. So the 20 period is slightly extended. It is healthy. It is strong to the upside. I just think it needs a little bit more. So the 4 hour starting to become a little bit nicer. I would actually prefer this to come down and give me my ABC corrective, because I feel if it does that, then retail gets stopped out here roughly, and it just resets this pretty strong trend to the upside. My bias is dollar longs. I think that absolutely makes sense from a technical and fundamental perspective. I just need this impulse to digest a little bit more. So if we think about this 70-30 rule, where markets trend 30% of the time and range or pull back 70% of the time, we're expecting this to probably continue, possibly for a little bit longer, possibly. That would change if we do get a break above the highs, and the dollar strength can continue. I just think it needs a little bit more. So I wouldn't discount this coming back down, potentially taking out retail here for a complex corrective before continuation. And that is what I would like to happen. In which case, if you do get that and you get a reason to enter, and some sentiment here, or some bullish pressure around that full pullbacks area, it would be a good time to get into potential dollar longs. Because I think if you are buying the dollar, I'm not saying that as a bad play. I'm just saying we could get some pullback weakness in it as we do digest this move it's had, this can't continue forever. So just be aware of that. Although if we close like this on the 4 hour, it's not bad. So this is what I would say. I would say look for, obviously a break and close above the high, or look for potential opportunities to buy up that dollar, possibly around that 40-60 box in terms of fib. So if we take our fib level here, the US dollar does like the 50. So we could get a pullback roughly into this area before we, continue in that trend. Bradley, on a newbie to trading world, hope to learn a lot for you. Welcome, Bradley. It's a tough business, but if you keep working, it's a great business. Just be patient with it. And the thing I always say is focus on the process, and the money will follow. So focus on the process first, and then the other side comes into it. SM, how much volume has a role in your trading? A big role, SM. I've done a few workshops. I've done a few workshops on it. So make sure you check A1 Trading. You'll see some of my streams where I specifically talk about volume. Too big of a topic to go into right now, but certainly, I like it. Certainly like it. Victoria, hey, how are you doing? I haven't seen you in a while. Staying up late tonight, loving the CAD at the moment. Yeah, so I had a great trade, or this is not a trade actually. That's a wrong way of saying it. I'm testing a new strategy, which I'm actually just about to implement. Right, so I took this NZD CAD, what I'm calling my aggressive entry. I'm sure some of you will know here, right? And I use my SAR. So this trade, or this testing on NZD CAD has been an absolute beast. So from a testing perspective, I'm up about 12% on this, which is great. This is one of the reasons why I'm developing this strategy. So if I go to the data on it, this is actually the data on my aggressive. You can see I'm currently up on 18 trades, 18%, and that's without this. So bringing it up to around 28.2. I am in an oil one as well. So this is very close to being implemented. But NZD CAD has been a beast, has been an absolute beast. So I have to say, I'm so excited to implement that strategy, because for me, like, I've got my bread and butter, my blue chip strategy, my breakout retest, which is not going to cause any thrills. You're not gonna be a millionaire overnight, but it's a very solid strategy that'll get you your X percentage, or certainly beat the SPX. I mean, this year, anything plus is beating the SPX. And then I've got this more aggressive one, which I think complements it really well. So, and I think I won a trade in the CAD recently as well. I think Aussie CAD I won, which is ironic because I normally don't like it. I think I won an Aussie CAD short, but yeah, it's doing not bad. It's doing not bad. Hey, Ryan, what's your take on gold? Okay, so I'll go into what I'm looking at. This is what I'm looking at today. This is my watch list. I've got three. I've got oil twice, a long option, a short option. I've got Bitcoin shorts, and I've got Kiwi yen shorts. And I'm also currently in a Kiwi Swiss trade. So as I said, I like the idea of buying up these risk-off currencies against the risk-on, which Kiwi Swiss obviously is. So I took this breakout on account of this pattern here, larger structure, what I call the cup with handle, first structure, second structure, and then we got our AB shallow C. So I took this breakout here. Stop was initially above here. TP1 was hit roughly around here, and now I'm just trailing these swings. So I've reduced my my risk by half, and now I'm just looking to play this to the downside. I think it's in a nice position. I don't think the 4-hour price action is very nice. I like where the daily is. I think this can really move. It's not extended. I think in terms of the trend continuation argument, it's kind of gone away from that. Certainly from this area, where that, along with our risk sentiment, for me, I'm quite happy to be in this. And as I said, it just seems to be potentially starting a move here. So I'm in New Zealand Swiss shorts. I just need some follow through. This is what it's lacking here, and I don't particularly like this. This is sometimes a case for a loss of momentum, and then potentially a harder reset to the other side. So I'm kind of wanting this to really fall down, but it's being a little bit stubborn with me. But anyway, I've reduced my risk, and I move on to the next trade.
Let's face it, if you're trading Forex without a winning trading plan, you're gambling. You need a model that is going to long-term net you a profit. Our team has put together a free guide on how you can actually create a trading plan.
All you have to do is use the link down below in the description.
Send the word template to our team on Telegram and we'll send you a copy. Again, hit the word template in your Telegram, send us a message and we'll get back to you with a copy of the free trading plan template.